Hey, this is Awais with eMiniPlayer.net, and this video is for Thursday, December 16th. Let's start with a brief review of the trade plan. Um, so coming into the day, bigger picture, we know that buyers are still in control, and the expectation was for responsive buyers to be active on any pullback into support. 26 quarter to 28 quarter could potentially mark the end of the pullback before we resume the upward trend. So that's a very important zone, and since it can mark the end of the pullback, that's an area where I'm going to be more aggressive on the long side, because the risk reward over there, if I'm risking 2 points, there's potential I can make 8 or 10 points, since the next area of key resistance is at 37 quarter, 39 quarter. So there's a 10 point on the profit side, and my risk is 2 points or less. And then coming into 37 quarter, 39 quarter, I'm expecting some rotation, but the expectation was that if ES ends up getting that area, then there's a good chance that we'll get a pullback and then a push for the heavy acceptance level at 1240, and then a pause at 1240. So that is a plan for the day. Let's start with the opening swing. We had the Philly Fed survey out at 9 a.m. and the expectation was the market to just remain range bound up till 9 a.m. And we can see we open at 32, pretty much just chopping within a range. And since we're expecting a range bound market, we're not trading breakouts. I'm looking to either fade the market or just not enter at all. So when we get this opening range, 31 quarter to 33, as we break above it, I'm not aggressive on the long side over here because I'm still expecting a range bound market, so it doesn't make sense for me to trade a breakout. I'm looking to fade any up move, and I'm looking to fade the down moves. So we get this opening swing. 33.75, interestingly enough, is yesterday's opening swing low, and we get responsive sellers active over there. Some rejection. We also had some negative tick divergence, but I did not bother putting on the short trade because I thought we could potentially make a move to 35, and given the scenario, I just didn't feel like it was really worth it, because we had the bull bear line in sand at 1230. So if I'm shorting 33 half, or let's say 33, and my target is above 30, since responsive buyers could be active here, and I'm using, let's say, a 2-point stop, I'm only looking for a 2.5, 3-point target, 1-to-1 risk reward, not really worthwhile. So I simply stayed out. We get a push down into initial support, so this is the area where the trade plan said that the selling could shut off, and this might actually be the pullback before we continue to make new highs. So I want to be very aggressive in this area. I wasn't able to get long on the first touch, but I was able to get long on the pullback after the number came out, and then a quick scale out for 2 points at the bull bear line in sand, and then I'm scaling out over here at the open for 4 points, and then I'm just sitting tight and waiting for higher levels. I've already covered my risk. I'm sitting at a break-even stop. Actually, my stop was 2 ticks below my entry. So from a risk management perspective, I'm sitting really good, and no stress, pretty much a stress-free trade at this point. Let's go over to 5 minute. So here we can see push down, take a long, scale out. If you missed it, if you were looking for some confirmation, then I would say, looking at the tick chart, we can see that we get this push down into support, very high volume on this push back up, consolidation, and since we're looking at 37 to 39 as a potential target area, even getting long over here at 29, 30, any of these prices, the risk reward is still good. Obviously, after waiting for confirmation, there's a cost to waiting for confirmation. Typically, when I'm waiting for confirmation, I'm getting in a little bit later because I'm waiting for the market to confirm, and the market pays you to take risk. And once you get the confirmation, everyone else sees it as well. You're not going to get the best trade location. So it's compromise and a give and take between, do you want the best trade location and not necessarily have a confirmed entry that, this is going to go up. You never really have a confirmed entry. Or do you want to wait for some confirmation, wait for some additional signs that buyers are active in this area and then get in? You're just going to have to use a wider stop in that case. So if you're getting in at 1229 or 1230, your stop should really still be below this low, or maybe even at this low. So slightly wider stop, slightly more risk, but at least you've got confirmation now. So these prices are still good to get long. And I continuously posted this morning on Twitter that the risk reward is very good on the shorts, or sorry, on the long side. Even as we were pulling back, that's what I was posting, that the risk reward is good, and I'm still going to hold long. If I have to take a 2-tick loss or a break even scratch stop, that's fine. But there was a chance that the market could push up to 37 quarter, 39 quarter, and that was my final target. That's what I was looking for, and we got it later on in the day, in the morning actually. So essentially, one scale out for 2 points, one for 4 points, and then I had to run to a meeting. Otherwise, I would have actually held it even longer, and the final out was for 8 points. But the trade itself, just this one trade, if you held it or even held a runner, was technically good for more than 10 points, or at least 10 points if you actually managed to hold it all the way. So we can see up here, 39 quarter to the tick, the buying shuts off. We're expecting rotation, rotate back down within the zone. I believe this is a 2.25 point rotation, pretty normal. Coming back up to 39 quarter again, and we had negative tick divergence on this push up, and then this bar down gives you confirmation on the sell side, and we also have 1240 we can lean against. 1240 is also the 100% extension of the IB range, which is a level to keep in mind. 40.5 is the 100% of the Globex range. So there are a lot of things that you can lean against over here if you are taking a short. And but just know the type of trade you're in. Just know that you're not taking a short and expecting it to come all the way down to 30 or 31. At this point, we know that buyers are in control, and until we see a break of 35, buyers are pretty much in control, and I wouldn't really be pressing it on the short side. 35 was also a low volume node on the intraday profile. From 33.5 to 35, price simply just sliced right through it, which is this price action right here. Buyers simply just in this initiative buying, this pushed right through it. So the expectation is that when price pulls back, we're going to have buyers active again within this area. And sure enough, we're above the IB high. This is another point that I've mentioned in the past, that going into the last half an hour to 45 minutes, if you're trading above the IB high, there's a good chance that we're going to get another push up. Likewise, if you're trading below the IB low into the last half hour, there's a good chance we can get some liquidation. And so this worked out pretty well. If you missed any of the earlier trades, or perhaps you did capitalize on this, but you still want to trade, I would do it with less size, since it's later in the day. And if you've already had a good day, why risk too much? Perhaps adjust your position sizing for the last half hour, since it is technically riskier. And you can still trade this swing. And we got within 1 tick of the 1240 level into the close. So the plan that was put together worked out very well. But again, we're prepared for both scenarios. I don't know that this is going to happen, and it was just a hypothesis. It happened to work out. Our job is simply to identify the risk reward, identify the probabilities, enter the trade, manage the risk. If this worked out, it couldn't have worked out. We could have had a move from here to here and then another sell-off. Anything's possible. So I think it's important to phrase your hypothesis in a way that still leaves the door open for the other side. You don't want to say, I think we're going to come back here and then price is just going to make new highs, or price is going to do this, because you never really know what it's going to do. It's always a guess. It's always a hypothesis, and then the market slowly starts proving you right, and then you start holding your trade because the market is proving you right, and it's proving that your hypothesis is working. And on the upside, then that's when you want to hold your trade. On the downside, you've already defined your risk, and if it doesn't work, it doesn't work. It hits your stop, which is okay. I was completely prepared for that. If it stopped me out for 2 points, I really would not have any hard feelings because I had a lot of conviction in this trade, and my job was to pull the trigger when price got to my area. If I missed this trade, I would probably be pretty disappointed. But if I got stopped out for 2 points or 6 ticks, it wouldn't really be a big deal. If anything, I would just be looking for the next trade at the next area, whether that's support or a pullback into previous support, acting as resistance and taking a short. But I just want to emphasize that my role as a trader is not to predict what the market is going to do the next day and pretty much call the market, but to just identify areas where the risk reward is in my favor, and where I can pull the trigger with minimal risk, and then the rest is really up to the market, and if it works, it works. So overall, good day, good price action, hit our targets. For tomorrow, let me pull up. Now I hope you guys are using the tagging feature on the website. There's a tag for quadruple witching, which is tomorrow. And just taking a quick look here, we can see a type of price action that we get on options expiration, quadruple witching, futures expiration. Pretty much balance, price not really getting away much, essentially a choppy balance day. That's what's happened the last 2 quadruple witching Fridays. So when I'm writing the plan for tomorrow, that's a scenario that I'll be working with. Is a scenario of a balanced market, a range bound market. So in that scenario, I'm going to be looking to fade the market and not necessarily look for trend trades. We can see this is the last quadruple witching, and essentially we have test of resistance, push down, IB gets developed, and then we're just range bound chopping within the IB range. So that's a scenario to keep in mind for tomorrow morning. I think that about covers it for today. Let's take a look at the profile real quick. Responsive buyers active. This is essentially a single print down here. Not a lot of volume transacted down here into support. Buyers were very aggressive and active right on that push down. Initiative buying between 33.5 and 35. Price just sliced right through it. We have acceptance at 38.5, and 40 was the area we were expecting sellers to be active. So tomorrow, if we make pushes up to 46, up to 48, I'll be looking to fade those back down to 40, 38.5. If we get pushes below 33.5, into 31, 30, then I'll probably be looking to take those long back up. But we've pretty much been in this balance area for the past few days. We're in this tight range, and I'm still expecting vertical development one way or the other, and that'll probably come next week once we have options expiration and futures expiration out of the way. I think next week we'll actually break out either to the upside or downside. It looks like it's going to be to the upside, but again, instead of predicting which way it's going to go, let's just prepare for both scenarios and trade the one that presents itself. I think that about covers it. So if you have any questions, again, post it in the comments. Any feedback on the video, post it in the comments, and catch you guys later.